Imagine a company named Truth, a shining beacon in India's booming tech industry, celebrated for its ethics, showered with awards for corporate governance. Now imagine its founder, a revered CEO, confessing to a multi-billion-dollar fraud, built on mere dan een half decennium on illusions. This isn't fiction. This is the story of Ramalinga Raju and Satyam Computer Services, a deception so vast it earned the chilling nickname, India's Enron. He himself admitted, it was like riding a tiger, not knowing how to get off without being eaten. But how did a man build an empire on such a foundation of deceit? And what did it cost those who believed in his truth? In the vibrant landscape of late 20th century India, a new economic powerhouse was emerging, the IT sector. At its forefront was Satyam Computer Services, founded in 1987 by Raju Ramalinga Raju. Satyam, a Sanskrit word meaning truth, quickly became a symbol of India's technological prowess, offering IT services to clients worldwide. By 1991, it was listed on the Bombay Stock Exchange, poised for explosive growth. Raju was not just a businessman, he was a visionary, a national hero, seemingly building a future of prosperity for thousands. But beneath the gleaming surface, a dark secret was already taking root, a deception that would eventually unravel and leave a trail of economic devastation. Satyam's rise was meteoric. By 2006, the company's revenues had soared past $1 billion, and Ramalinga Raju himself ascended to the prestigious position of NASSCOM chairman, the voice of India's IT industry. Accolades poured in. In 2007, Raju was celebrated as Ernst & Young Entrepreneur of the Year. And in a twist of profound irony, Ruim een jaar voordat hij zijn gekend bekenten is afgelegd, ontving Satyam the Golden Peacock Award for Corporate Governance, an honor for ethical leadership and transparency. The company was seen as an unshakable pillar of integrity, a testament to India's potential. But how could a company so publicly lauded for its governance be, in reality, a house of cards, meticulously constructed on a web of lies? The truth, as we'll soon see, was far more sinister than any award could reflect. The mechanism of the Satyam fraud was both audacious and shockingly simple, a masterclass in cooking the books. For years, from as early as 2002-2003, Raju systematically inflated every key financial metric. Revenues, profits, and critically, the company's cash balances. Imagine a baker claiming to sell 1,000 loaves a day, when in reality, he only sells 100. To make this lie believable, he then pretends to buy ingredients for 1,000 loaves, creating fake invoices and showing money that doesn't exist. That's precisely what Raju did, but on a colossal scale. He would personally use his own computer to create fake bank statements, showing fictitious cash and bank balances totaling an astonishing 5,040 crore. That's roughly $1 billion USD that simply wasn't there. To further siphon off funds and create a veneer of legitimate expenses, Raju invented an army of 13,000 ghost employees. Every month, rupee 200 million, or $2 million USD, was allegedly withdrawn to pay these non-existent workers, funneled directly into his own pockets. And to manage this labyrinth of lies within Satyam's official systems, a super user ID was allegedly planted, allowing the hiding or showing of invoices at will. It was an intricate dance of deception, designed to paint a picture of relentless growth. But even a master illusionist can't keep all the plates spinning forever. Soon the cracks would begin to show, signaling the impending collapse. The first major tremor hit in December 2008. The World Bank, one of Satyam's significant clients, barred the company from doing business with them for 8 years, citing alleged malpractices. This was a stark warning, but it was just a prelude to Raju's desperate attempt to cover his tracks. On December 16, 2008, Satyam announced a plan to acquire 2 companies, Meta's Properties and Meta's Infra. The catch, these were companies owned by Raju's own sons. He intended to use Satyam's funds to buy out his family's struggling real estate ventures, hoping to plug the gaping holes in Satyam's fabricated balance sheet. But the market reacted with fury. Investors saw through the thinly veiled attempt to enrich Raju's family and drain Satyam's legitimate assets. Following intense investor opposition, the very next day, Satyam was forced to scrap the acquisition plan. This rejection was the critical blow. The tiger Raju was riding had stumbled, and the game was almost up. With his last desperate move blocked, Raju knew his carefully constructed world of lies was about to come crashing down. On January 7, 2009, the dam broke. Ramalinga Raju, the architect of Satyam's empire, resigned as chairman and, in a stunning confession letter, admitted to a massive 7,000 crore fraud, approximately $1.5 billion USD. He revealed the years of inflated profits, fake bank balances, and the chilling detail that he personally created fake bank statements on his computer. Just 2 days later, Ramalinga Raju and his brother Rama Raju were arrested, with Satyam's CFO Vadlamani Srinivas following shortly after. The Indian government immediately disbanded Satyam's board, taking control of the company to prevent further collapse. The Central Bureau of Investigation, India's premier investigative agency, took over the case in February, revealing the true scale of the deception to be closer to 7,800 crore. The confession was just the beginning. Serious questions about corporate governance and auditing practices across the nation. Lenders were defrauded, and trust in the market evaporated. In April 2015, a special court convicted Ramalinga Raju and 9 others, sentencing them to 7 years imprisonment and fining Raju 5 crore. The man who once rode a tiger of deception ultimately found himself consumed by it. But beyond the numbers, the question remained: how could such a grand deception go unnoticed for so long? And what lessons did it hold for the world? The Satyam scandal, India's Enron, is a stark reminder of the fragile line between ambition and deception. A company named Truth became a symbol of monumental lies, and its Golden Peacock Award for corporate governance transformed into a monument to profound oversight failure. The story of Ramalinga Raju is a cautionary tale, illustrating how a single individual, blinded by the need to sustain a fabricated image, can unravel an entire industry's reputation and devastate countless lives. While Satyam eventually found a new life under Tech Mahindra, the scars of the fraud remain, a permanent lesson in the critical importance of transparency and robust corporate governance. The world watched, learned, and hopefully strengthened its defenses against such brazen betrayals of trust. The story of Satyam is a stark reminder that even in the brightest spotlight, darkness can hide, but it's far from the only tale of ambition, deception, and collapse we've uncovered. Join us next time as we delve deeper into another untold story from the collapse files.